Now, as I talked about earlier in the week, the seasonality with our election cycle over the last 20 years is not playing out. That seasonality, we're not following it. That was suggesting the sell-off in early August. And again, we've gone sideways very closely to what our seasonality here, the longer term seasonality over the last 90 plus years. And again, the seasonality, if you look at the last 97 years of data, seasonality, we peak on September 6th, which is this weekend. And this is long-term seasonality. And you get a September sell-off. And historically, it's the worst month of the year. Our gap and trap from Friday was on September 5th. Does this play out? Because we went sideways in July and August, I think it's very likely you're going to see a September sell-off. 2023 and 2024, you saw a sell-off in July, a bigger sell-off in July in both of those years. You didn't see that this time around. You're likely going to see a bigger sell-off in September instead. Pointing out, according to the seasonality here, the long-term seasonality, we should peak either September 5th or early on next week based on the long-term seasonality. We're watching to see what becomes of the gap and trap that we got on the intraday charts there on Friday on the S&P 500. Please support the channel with the link directly below that allows me to be able to provide you this information. If you follow the link below, it'll take you to a secured site. You can donate any amount you want, make it a recurring donation. If you do that, I thank you. I don't have sponsors, just a direct relationship with you. Thank you for your consideration for that. The VIX, it popped higher at the beginning of the week. Tried to break out, it failed. We got the topping tail at the 200 period moving average. We've come back to fill the gap, and here we are at the moving averages at 10 and 20. As it looks like they're getting a bullish touch here. We've had the bullish divergences set up. We have a bullish falling wedge here, and we've pulled back just under a 50 period. You got to get back above the 50 period and get a breakout of this bullish falling wedge in order to have volatility return. We've had sell-offs back above the upper band. Then we've recovered, and that's given us this sideways kind of move on the S&P from the July high. We've gone sideways, slightly drifting higher, while the VIX has gone sideways, slightly drifting lower, forming this bullish falling wedge, forming the divergence on the RSI and multiple point divergence on the MACD and the stochastic. Stochastic did roll over, but again, we got the VIX filling the gap. If it's successful and we resume the advance on the VIX with a higher low, MACD's got to go positive, and then we've got to see the RSI turn back above 50. It's now dipped below 50, but still setting up a higher low, at least so far. So again, the VIX getting that bullish cross last Friday. You still got a bullish cross. Now we've got to be able to, rather than rolling over, we've got to be able to turn into positive territory if we're going to see a turn. Now, we had the week jobs report and the revision in June. The revision in June was revised down yet again, giving us a negative number, negative 13,000. It was sharply revised downward over the last 2 months. That gave us a gap and trap. We gapped higher on the 5-minute chart, and then we began to move in the other direction. We hit the 200 period, we bounced, we broke the trend line, we back tested it, and then we went sideways, bounced off the 200 again. We're stalling at the cloud at this time. So I'll be watching on Monday. Do we break the 200 period, or do we bounce off the 200 period, get back above the cloud, and go back and test this high, or a lower high, or try to challenge it? Remember, there's a trend line in the weekly and daily time frame that we're watching directly above this area. I'll show it to you again. If this is going to be a peak, we got to see signals turn back to bearish. Now, the jobs report came in very, very weak. Again, the stock market, or the traders and investors, the market was looking for a Goldilocks number. Not too hot, not too cold, but just right. Not a hot number that would take a rate cut off the table, but not a bad number, a cold number, as we got a very weak jobs report suggesting the economy is weakening. We didn't get the Goldilocks number. So we had the gap and trap. Here's the 15-minute chart. Here is the August 15th peak. We went just above that August 15th peak there on August 28th. Moved above this level, and then we gapped lower. We formed we gapped down on Friday after that Thursday peak, and we formed a bear flag, and then we gapped down to start our short trading week on Tuesday. Rebounded off the lows, gapped higher on Wednesday, gap higher, filled the gap on a Thursday. On Friday, we gapped higher, and we got a gap and trap on the intraday charts here, as you can see on the 15-minute chart and that 5-minute chart. We're still in this trading range, but we keep pushing slightly higher. This peak over here was slightly above the July 31st peak. This peak was slightly higher, and again, there's a trend line that watching from the 2023 bottom we've been running into, but we fell shy of that level there with the Friday sell-off, the Friday gap and trap session. We got an extreme. There's no divergence. You still might get one if you try to test that trend line. The S&P still go higher unless my signals turn bearish, which again continues to give us another reference point of a divergence on the 60-minute chart, on the daily chart, popping to a new high, but then starting to look like an ending diagonal in sections of 3 with overlap. We've got to take out the 200 period if we're going to turn down, and the 50's got to drop back below the 200 with price below both. Right now, we're bouncing off the 200 period back over here, and back over here. Continue to see the 200 period here in the 60-minute time frame holding as support, possible ending diagonal with multiple points of divergence. The divergence in July, late July, gave us a sell-off to August 1st, and we've gone sideways, slightly drifting higher. NASDAQ has made a lower high, at least so far, along with NVIDIA, which has had a bigger sell-off. With the rally on Thursday, we saw the stochastic turn back up. It's making a lower high, diverging also from the prior peak. Again, you have now a triple, actually quadruple if we go all the way back over to July, multiple point divergence on the stochastic. We had a failed breakout, and again, we didn't quite reach the trend line with either one of these rallies, but you don't have to, but you still could. Signals turn bearish, but we had a failed breakout right here. No confirmation, no follow through, and we turned down, and we got the hammer. We turned down sharply back to support over here towards our 50 period moving average, the green line you see right there. This is the lower Bollinger Band right here. On Friday, we hit the upper Bollinger Band and reversed off of it. You had a failed breakout here, turned down. You got this bullish hammer with a hollow rig candlestick for the real body, and then you turn back up, and now on Thursday we attempt another breakout above this level right here. Well, so far it's filling. We went higher on Friday, but then we reversed and we closed right at that level, here where we had our peak at the August 15th high. Push up here, it failed, and we turned right back down. We had a push up here, and so far it's failed. We're closing right there. And we slammed, we gapped higher, and we reversed. Heard said, oh, number the Fed's going to cut, but then started seeing distribution. The number that we got for the jobs report for this month and the revisions down in June, July being already revised downward but slightly revised upward by 6,000. So more job losses with those 2 months together in totality after sharp revisions in the last report. I went through this in great length and detail in the last update. This is what happens. Start seeing deterioration in the labor market right before the recession. If these numbers are real, which is always questionable given the untrustworthy data that the labor market constantly puts out. It's just, you just don't know. Those are the constant revisions. Hopefully this changes. But it's signaling that in the next few months, we could see the market move to a new high after a correction. and eventually begin to tank and usher in a bear market. I think we're going to see a correction. Then I think in September here and rally on up into October, November, December maybe. But in the coming months ahead, I believe you're going to see a top, maybe October, maybe November, December. Because we didn't see much of a corrective move in July and in August, and we sold off here, rebounding back up here in early September, it's likely the long-term, nearly 100 years seasonality is going to play out, and we're going to get a corrective move in September, which historically has been the worst month of the year for the S&P 500. You know, in 2020, we had the correction in July, bigger correction in July. 2024 and 2023, we didn't get that here in 2025. It's likely we're going to see a bigger one in September. Given us a quadruple negative divergence. This is the strongest signal in technical analysis. This quadruple negative divergence that is formed here, where you have multiple points of divergence. A triple and quadruple negative divergence are the strongest signals in technical analysis for reversals. Still have this divergence on the MACD, and again, multiple point divergence. The MACD is not turning back up on the daily chart here. So again, we'll be watching what becomes of this gap and trap on the intraday charts. We went up and we hit the upper Bollinger Band, and we got rejection there. We did that over here. We hit the upper Bollinger Band, we got rejection, and we've turned down here. We were flirting with the upper Bollinger Band. We turned down, went slightly higher, and got that reversal bar. There was only confirmation. There was no follow-through. So with this bar coming back to this level, you have possibility of a fill breakout again for the second time at the upper Bollinger Band, trying to clear this level. We'll see what happens going into next week. If we are to build upon this for a rejection at the upper Bollinger Band, you've got to see the signals turn bearish in order to validate that reversal off of the upper Bollinger Band. Now, if this ends up being some type of reversal off the upper Bollinger Band, you've got to take out the momentum cloud. Okay, we tried to do it a couple of times over here, but we weren't able to stay below it. Bottoming tail here, you got this candlestick, no follow through with this one, you got right back above it. Same thing with the 20 period and the 10 period. You've got to lose them. We've been trying to bounce surrounding the 20 period moving average or just underneath it. The 20 period's in blue, the 10 period is in red. And again, if we're going to go lower, you have to drop below that level. Right now, we came back to the 20 period moving average, and we're resting right on that 20 period moving average with Friday's close. Multiple point divergences will end up playing out, but we've been going sideways, slightly drifting higher as NASDAQ is going sideways and making a lower high, at least so far, along with NVIDIA. If we move above the upper band again, there's a trend line directly overhead from the 2023 low. Still might try to tag that before you reverse, but this divergence is likely going to give us a doozy of a sell-off. I think we're headed back to the 200 period moving average, but again, going in this trading range, slightly floating higher with each rally. We've been talking about this 2023 trend line for a long time. Again, from the 2023 low, this is a trend line in the daily time frame. I've been showing it to you in the weekly time frame for even longer, but we slammed up into it July 31st, sold off, and we hit this trend line going back to May and June. Came down, hit it August 1st, and we popped back up and we peaked again, hitting this blue trend line August 15th. We turned down, we hit this trend line again, the red trend line, right there with the August 15th sell-off. We bottomed out and we rebounded back up. Didn't reach the blue trend line this time, came back down and tried to take the trend line out, the red trend line out, couldn't do it. We closed right on it with the hammer candlestick. I'll bring it up close so you can see it. Again, rejection, July 31st there, hit the trend line, bounced up to the blue trend line there, and then got rejection, came back to this trend line right here. And again, we have multiple touches on this trend line, And right here, we tried to breach it at the intraday lows, but we closed with the hammer right on that trend line, got back above it, and right now, Friday's high was just under the blue trend line. Was it a gap and trap and we break the red trend line, or do we still try to reach the blue trend line? Again, it's likely that we're going to eventually break the red trend line. It's still possible that we reach the blue one. If signals remain bullish, there's still that possibility. They tried to turn bearish at the intraday lows, and they couldn't do it on the S&P 500. Signals still remain bullish on the S&P. We're in a tight trading range. There will likely be a resolution to the downside, eventually breaking this trend line, but you still may hit the blue trend line if price continues to try to rally. Zoom out, you can see we previously had the rising wedge. It broke down, but there was no follow through to it. We only got confirmation. We didn't see the signals turn bearish and remain that way. We had some signals turn bearish, but they reverted right back to bullish, and they're still bullish at this point. You can see the multiple point divergence here on the RSI when I zoom out, and if it plays out, now being a quadruple negative divergence, if it does in fact end up playing out, we need to see the RSI go into the negative region, dropping below 50, and then we need to drop below the 50-period moving average to get a 50-50 sell signal that will give us a bigger pullback towards the 200-period or the 100-period or the cloud here, again, towards the 200, or maybe tagging it if we attempt a larger Fibonacci retracement. But again, this multiple point divergence has successfully lulled people into a false sense of security, just like the triple divergence that we had over here at the February peak. The herd scoffed at the idea of a sell-off, just as they are doing right now. Oh, the Fed's going to cut, but ignoring the fact that we're seeing rapid deterioration in the labor market. If those numbers are real, eventually we should see a bigger negative number. I talked about that in my last update. Go watch that video. I'll link it at the end of this one about the coming recession based on the labor market data, and I talked about the inverted yield curve in my last update. People ignored this divergence over here, and right now they're ignoring this one. I think it will not be something like this, but I do think we'll get a larger pullback because the market takes its time doing what it's going to do. Then people go, oh, it's not going to happen. So I'll be watching this previous peak over here to see if that acts as support. The February peak there, I think it was 6147. I'll be watching that level, and below that you have the lower end of the cloud, the 100 period, and the 200 below that. We'll be looking at the Fibonacci retracements if we start seeing signals begin to turn to bearish. Start seeing this divergence play out. Now the S&P went higher. Again, my signals remain bullish. It looks like a possible ending diagonal if we turn here or get confirmation, validation really of a reversal. You got a possible ending diagonal. Again, at some point we'll see a corrective move, and then we're likely going to go towards 67, maybe 6,800, the trend line in the weekly time frame. We're watching to see what kind of candlesticks we would get by the end of the week. We had the back-to-back reversal bars. We had a hanging man followed by a doji on the S&P 500 weekly chart right here. And those candlesticks slammed into resistance from the January 2022 peak on our log scaling, and we hit it again and turned down off of it with our linear scaling. We're just underneath that level. But the candlesticks, again, are meaningless unless they get confirmed, and they have not been. We did not confirm the hanging man. We did not confirm the doji candlestick. But we did get another little topping tail with the gap and trap pattern there on the intraday charts. We came down and we found support at our 10 period. The 10-week moving average, you got to break that if we're going to sell off. If you look at our trend line in the daily time frame, going back to that blue trend line, we didn't quite reach it over here and over here on Friday's reversal. We didn't reach it. We still may. if we take out this trend line, then we may not. But right now, we came back and we rested right on that trend line. Look at that. We hit it again with the intraday low on Friday after trying to breach it and closing right at it there on the Tuesday session at the beginning of the short trading week. Getting back above it here, we found support at it. So again, I'll still be watching this blue trend line. In order for this to be a peak, we've got to break the red trend line, and we've got to see that validated with signals turning bearish, getting rejection off that upper Bollinger Band. If we flirt with the upper Bollinger Band some more, then we'll be watching this trend line. But that upper Bollinger Band could have marked a peak on Friday with resistance. We pushed above it and got rejection at it, as I showed you in this video. So no confirmation on the candlestick, but we did go up with this candle right here, and we slammed into the trend line, and this is up close. These are log scaling, and I'm going to try to fit another arrow in here. We keep getting rejection at this trend line. Here we tried to push above it, and we closed right at that trend line again. This was from our 2022 peak. The peak in late 2024, the peak in early 2022. You connect that to the December 2024 peak, 2022 high, 2024 peak there in December, and we have slammed into it here. Sorry about that, got a little frog in my throat. We slammed into it here over the last several weeks, just drifting slightly higher. Eventually, I think we're going to this trend line. I think we'll get rejection off this trend line, move back towards the 20-week moving average or the 50-week moving average, one or the other. This is the 20-week in blue here, and then I think we'll end up going higher towards 6,700, maybe 6,800 whenever we come into contact with that trend line. That's where I think the top will be. I think that will happen going into the next few months. That we likely see a peak in the market, I think, October, November, December. And again, it's looking like November, December maybe, because we're probably going to get a pullback here in September. So I still think we're going to go higher. But just drifting here along this trend line, just much like what we had over here and over here, just right under it. Over here, again, just straddling along the trend line, and then you get these bigger sell-offs, and that's what I think we're going to see happen here. We've rallied slightly higher, but we're still stalling at the trend line. Nothing has changed. Now, while we slammed into this trend line from 2022 here, we were just under the 2023 trend line with our linear scaling. Again, no confirmation to the prior doji during the week, the prior week. And again, at the 2020 trend line, I've been showing you this in the daily and the weekly time frame. We're just slightly under it, a little hard to see here, but just slightly under that level. And again, eventually I think we're going here. This is our linear scaling. It was the trend line of support and the rising trend line that gave us the bottom in April. Here we've been straddling along this trend line. It's likely going to give us a short-term top. And then later, this trend line parallel boundary to the lower boundary here that I've drawn in from the 2022 peak in January. I think that will end up marking a top somewhere near 6,700 or maybe 6,800 on the S&P 500 in the next few months. And again, here's our log scaling. Here's that 2022 trend line again. Again, we're slamming up into it here again, just much like what we had over here in December and January. That ended up giving us this 21% drop. And again, I don't think we get that again, but I think, again, we're moving either the 50 here or the 20-week moving average, which we just saw a second ago. But you've got this negative divergence with the NAAIM exposure index. This is showing what active money managers are doing. They're all in. Now it's starting to turn down. When they're all in, with the divergence at an extreme or at an extreme, it tends to mark a top. Short-term top. I've circled some of them here. Some of them are big. Some of them are pullbacks. Some of them are small. Over here, a major top in 2022. Another major peak there in February of 2025, but not terminating the bull market. Again, likely going to get a pullback, and it's not going to terminate the bull market either. Eventually, in the next few months, I think it will happen. And as we've saw 2007, it could be that we end up getting a big negative number with the jobs report at some point in the future. We'll probably see it go back to positive, but at some point in the next few months, we're probably going to see a big negative number, and that could be the final nail in the coffin. I still think we're going to see Jamie Dimon's crack in the bond market myself. Could be a couple of catalysts. There were a couple of catalysts in 2007, as I talked about my last update with the subprime mortgage crisis and the deterioration in the labor market. I wouldn't ignore this bearish divergence at an extreme. It's going to play out. We may hit that 2023 trend line, but we may not. Already stalling at this trend line here with our log scaling just under the one with the linear, as I've talked about in this video. Well, the S&P is making a new high. The NASDAQ is not making a new high. It got a black candlestick once again. That's what marked the peak over here at the upper Bollinger Band. We did not reach the upper band. It still may try to make a new high. So far, it has not done so. And NVIDIA has not been able to make a new high. NVIDIA already peaked. So did Bitcoin. NASDAQ peaked over here back at the same time Bitcoin did on August 13th, Bitcoin peaked on August 14th. So does this black candlestick end up playing out, just overthrowing our 78.6 Fibonacci? Right here, I told you that we were just shy of that level, and we began to sell off. We came back to the 50-period moving average. We got the hollow red candlestick. We rebounded back up. Now you're hitting it, overthrowing the 78.6 Fibonacci, getting a black candlestick. If this ends up giving us a reversal, I'll be watching the gap here that we had on Wednesday. I'll be watching the low over here and the low over here to see if we make a move to try to take those out. Should we put in a lower high here at our Fibonacci, 78.6 Fibonacci level, our overthrowing of that, getting a black candlestick. Black candlesticks sometimes mark peaks, not always. Right here, it didn't happen. Up here, it did. Sometimes they do. Lower candlesticks often will mark a bottom. Short-term bottom. Hollow red candlesticks mark bottoms. Black candlesticks can often mark tops. What that means is we gapped up, we closed down below the open, so you get the black candlestick, but we still had a positive close just above this level. Had we taken out the previous closing, it would be a red bar. Often they are reversal bars, and that was the gap and trap on the intraday charts that we got. NASDAQ already turned off the resistance trend line right here with our log scaling. And again, if we do try to go higher, you can go up and hit it again and then turn. But right now, so far, that high is still holding. Eventually, I think we go up and hit this trend line from these highs back over here. And again, I think that we'll end up seeing NVIDIA also make a new high after the correction is done. NASDAQ is forming a massive broadening formation. And I'll just show it to you quickly on the daily chart. You can see it here on the weekly chart where, again, you got a 5-point reversal. 1, 2, 3, 4. And I think we're getting 5 right now. I don't think it's done here. I think this whole thing is the 5, and it's a 5-point reversal. And then you're going to see it turn and begin to give back this entire rally that we had off the 2022 low, and eventually usher in a bear market that will likely crash the NASDAQ again. When it crashed in with the bursting of the tech bubble, it dropped about 42%, I believe it was, in a couple of months. Likely going to see the same thing. Going to get a crash to kick off the bear market. The crash that we had over here, this crash right here that we had, is going to be smaller than the one that we're going to get to kick off the bear market to begin to price in the recession. Again, you'll likely move back to the 20 or the 50-week moving average here and then go up and hit this trend line, and then I think it's going to end. But we've been going sideways, putting in a lower high. S&P's been going sideways, putting in slightly higher highs, and that lulls people into a false sense of security that, oh, it hasn't happened yet, so it's not going to happen. Really, we've been drifting sideways on the NASDAQ. NASDAQ's already turned off the trend line here. Again, likely going to pull back to the moving averages and rally into November, December. Here, I've marked it out to December. It could be in November. Already turned off of this trend line. This is our linear scaling. Just as horizontal support marked a bottom Again, this trend line was likely going to mark a top, a short-term top, and again, eventually go higher. The broadening formation, though, the broadening formation is the same pattern I've talked about that is formed on NVIDIA. NASDAQ's doing the same thing. It's likely going to pull back here towards the 200 period. Maybe this peak over here marks the bottom. Maybe we go a little bit lower, but towards this area. And again, signals are mixed right now on NASDAQ. Some have turned back to bullish with the rally. Many others remain bearish. So again, it's because we're going sideways, as you can clearly see on this chart. And I've drawn the boundaries from these lows, from these highs over here. And again, this could be where we are headed for the NASDAQ. This is a daily chart of the NASDAQ here. Again, a 5-point reversal. This is exactly what I think is going to happen with NVIDIA. I've talked about it at great length and detail. NASDAQ's doing the exact same thing. Again, this goes back into 2024. Well, NASDAQ's attempting to recover. NVIDIA is holding below the 50-period moving average. We had a little bear flag form on NVIDIA, and it played out. We still have the bearish reversal of conditions. NASDAQ had flipped back to bullish in the daily time frame. We're seeing the MACD go into negative territory. For NVIDIA, this is NVIDIA's daily chart here. Again, things are still bearish. Now, if it attempts to rally back up towards the moving averages of 50, the 10, or the 20, then maybe NASDAQ tries to move to a new high and diverges with NVIDIA. Now the NASDAQ is diverging with the S&P. Stalled just above the 78.6 Fibonacci. NASDAQ still may get that lower high with the black candlestick. But as I've said, NVIDIA broke the trend line. It's got the bearish reversal conditions. It's already peaked way back over here in early August. But NVIDIA got a bearish reversal of conditions this week. It's below the 10-week moving average. This is the weekly chart of NVIDIA. You see the little red arrow. You see the red bar. The cloud is now turning to red, and you got a red awesome oscillator bar. So again, NASDAQ could follow NVIDIA's lead if we get a follow-through to this move without getting an immediate rebound back above the 50 period in the daily time frame on NVIDIA. This is the NVIDIA weekly chart. Now, we did get a red bar on the awesome oscillator for NASDAQ, not S&P, but for NASDAQ, but not a bearish reversal of conditions in the weekly time frame. When we got that the last time around, it led to the February sell-off. We got one at the peak, tried to rebound, got a lower high, and then got another one, and it led to this sell-off here for NVIDIA. Same thing for the NASDAQ. NASDAQ got the red bar, tried to get a bearish reversal of conditions at the lows, rebounded back up, and again, we got a gravestone doji last week. It did not get confirmed, but you've got a red bar going on here. Here's our bearish reversal of conditions after the February peak on the NASDAQ, and this followed. I'm not saying we're going to get that so big. I think we're moving back to these moving averages here, and then I think we're going to bump and go get one more rally, one more bump higher. NASDAQ weekly chart here, red awesome oscillator bar. We'll see if the S&P gets it at some point next week. Momentum's turned back up for NASDAQ. So far, we have a lower high. If we try to rally again, our trend line's on the weekly time frame directly overhead. As you can clearly see, we're going sideways with, so far, a lower high at this point. NVIDIA attempts a recovery. NASDAQ might try to make a new high. NVIDIA continues to sell off. Then again, we'll be watching. Do we take out the 50-period moving average here? That's the green line, and start heading back towards our 200-period moving average here on the daily chart for the NASDAQ.